Your government tells you they're working for your financial freedom. They promise prosperity. They talk about protecting your interests and building a strong economy. But history tells a different story. History is filled with governments using dark financial tricks to keep populations poor, dependent, and unable to challenge power. And every single one of those tricks is being used against you right now, today. By the end of this video, you'll understand the 5 financial weapons governments deploy to systematically transfer wealth from your pocket to theirs. And you'll see why financial ignorance isn't an accident. It's a feature of the system, not a bug. Let me ask you a simple question. When was the last time your school taught you how inflation actually works? How central banks create money? How the tax code is designed? How compound interest destroys or builds wealth? Never. Because if you understood these mechanisms, you'd be immune to manipulation. And the system can't afford that. So let's start with the oldest trick in the book, the one that's been stealing from you every single day of your life without you even noticing. Trick number 1, inflation. The invisible tax that requires no vote, no legislation, and no consent. Your government tells you that 2% inflation is healthy, normal, even desirable. They say it encourages spending and stimulates the economy. But let me ask you something. Healthy for who? Stimulates the economy for who? Not for you. Inflation is the most sinister form of taxation ever invented because it doesn't look like a tax. There's no line item on your paycheck that says inflation tax withheld. There's no bill you receive. There's no politician you can vote out for raising it. It just happens, silently, constantly, invisibly eroding the value of every dollar you earn and every dollar you save. Here's how it works. When the government needs money but doesn't want to raise taxes because that would be politically unpopular, they simply print more currency. They call it quantitative easing or monetary stimulus or whatever technical term makes it sound sophisticated and necessary. But what's really happening is simple. They're diluting the money supply, creating new currency units out of thin air. And when you increase the supply of something without increasing its underlying value, you decrease the purchasing power of every existing unit. Your $10 today buys less than $10 bought last year. Not because goods became more valuable, but because the dollars became less valuable. This is theft, legal theft, systematic theft. And it's been happening for over 50 years at an accelerating rate. Now here's where it gets truly evil. The government measures inflation using something called the Consumer Price Index. And they tell you inflation is running at 2 or 3% per year. But that number is a lie. A carefully constructed lie designed to hide the real rate of currency debasement. The CPI doesn't measure what you actually spend money on. It measures a basket of goods that's constantly being adjusted, substituted, and manipulated to produce the lowest possible number. Housing costs exploding. They use rental equivalent instead of actual home prices. Steak getting too expensive. They substitute it with chicken and say you're getting equivalent nutrition. College tuition skyrocketing. They say you're getting better education, so it doesn't count as pure inflation. This is called hedonistic adjustment. The idea that if something gets better while getting more expensive, the price increase doesn't count as inflation. By this logic, if a car costs twice as much but has a backup camera, there's no inflation. If a phone costs 3 times more but has a better screen, there's no inflation. It's insane, but it's deliberate. Because here's what the fake inflation number allows them to do. They can give you a 3% raise and tell you you're getting ahead. Meanwhile, real inflation, the actual cost of living, is running at 8, 10, 15%. You're losing purchasing power every year. Your salary increase is a pay cut in disguise. But the government statistics say everything is fine. This is gaslighting at a national scale, and it only works because most people never learn to see through it. Trick number 2, financial repression. Forcing you to lose money by keeping interest rates below inflation. Let's say you're responsible. You save money. You put it in a savings account like you're supposed to. The bank pays you 0.5% interest per year. Meanwhile, real inflation is running at 8%. You're losing 7.5% of your purchasing power every year just by being a saver. This isn't an accident. This is policy. It's called financial repression. Governments deliberately keep interest rates artificially low to make borrowing cheap. Cheap for who? For governments drowning in debt. For corporations. For asset speculators, but devastating for savers. For retirees living on fixed incomes. For anyone who's trying to build wealth slowly and responsibly, you're being punished for saving. The system is designed to force you into riskier investments, into the stock market, into real estate, into assets that benefit from inflation instead of being destroyed by it. But most people can't afford to play that game. They need liquid savings for emergencies, so they keep money in banks and watch it evaporate. This is a direct transfer of wealth from savers to borrowers, from the prudent to the reckless, from you to them, and it's completely legal. In fact, central bank officials stand up and openly state that financial repression is policy. They just don't call it theft. They call it encouraging investment and economic growth. But what they really mean is, we're going to make sure your savings lose value so you're forced to take risks you can't afford or stay poor. Trick number 3, complexity as camouflage, making the system so complicated that wealth transfer becomes invisible. Have you ever tried to read the tax code? It's over 70,000 pages. 70,000 pages of rules, exceptions, loopholes, and contradictions. Nobody understands it. Not you, not your accountant, not even the IRS agents enforcing it. And that's the point. Complexity isn't a bug, it's a feature. Because when the system is incomprehensibly complex, you can hide anything inside it. Here's how it works. The ultra-wealthy have armies of lawyers and accountants who understand the loopholes. They know how to structure income as capital gains taxed at 15% instead of salary taxed at 37%. They know how to use offshore entities, charitable foundations, and depreciation schedules to reduce their effective tax rate to single digits or even zero. Meanwhile, you, working a regular job, have your taxes withheld automatically from every paycheck. You can't hide, you can't defer, you can't structure, you just pay. The complexity ensures that sophisticated players can game the system while unsophisticated players get crushed by it. And it's not just taxes. Look at financial products. Mortgages with adjustable rates and balloon payments, credit cards with compound interest calculated daily, student loans with variable terms and forbearance penalties. Everything is deliberately complex because complexity creates information asymmetry. And information asymmetry creates profit for the people who understand and loss for the people who don't. You're signing contracts you don't understand, agreeing to terms you haven't read, entering into financial arrangements designed by lawyers whose entire job is to extract maximum value from you while giving you minimum recourse. This isn't capitalism. This isn't a free market. This is institutional predation protected by complexity. Trick number 4, redefining words until truth becomes meaningless. Let me give you an example. The government says unemployment is 4%. Sounds good, right? The economy must be healthy. But that number doesn't count people who've given up looking for work. It doesn't count people working part-time who want full-time jobs. It doesn't count people whose unemployment benefits ran out. The real unemployment rate, if you count everyone who wants a job but doesn't have one, is closer to double the official number. But they don't report that number. They report the manipulated one. And the media repeats it, and everyone assumes it's truth. Same with GDP. They tell you the economy is growing. But GDP counts government spending as economic growth. If the government borrows $10 trillion and spends it, GDP goes up. But you're not wealthier, you're deeper in debt. GDP also doesn't account for quality of life. It doesn't measure whether people can afford housing or healthcare or education. It just measures transactions. You could have a society where everyone is miserable, broke, and dying young, but as long as money is changing hands, GDP looks good. This is Orwellian language manipulation, redefining success to mean whatever makes the current system look functional. And it works because most people never question the definitions. They hear low unemployment and think things are good. They hear GDP growth and assume prosperity. But if you actually look at purchasing power, at debt levels, at the percentage of income needed for basic necessities, the picture is catastrophic. Words are weapons, and whoever controls the definitions controls reality. Trick number 5, using time horizons to hide catastrophic outcomes. Politicians operate on election cycles, 2 years, 4 years, 6 years. Their only goal is to survive the next election. So they make decisions that feel good in the short term, but create disasters in the long term, because the disaster will happen after they're out of office. It'll be someone else's problem. Print money to stimulate the economy right before an election? Great idea politically. The inflation it causes won't hit for another 2 years. By then, you've already won re-election. Cut taxes without cutting spending to make voters happy? Perfect. The debt crisis it creates won't explode for a decade. You'll be retired by then. Promise pension benefits that are mathematically impossible to fund? No problem. The collapse will happen in 20 years, not your concern. This is why every government program is underfunded, why every pension is underwater, why every projection assumes economic growth that never materializes. Because the people making the decisions won't be around to face the consequences. And you, the citizen, you're told everything is fine. Don't worry. The experts have it under control. Trust the system. Meanwhile, the time bomb is ticking. And when it explodes, the people who lit the fuse will be long gone. You'll be the one left holding the bag, wondering what happened, blaming yourself for not saving enough, not working hard enough, not planning better. But it was never your fault. The game was rigged from the start. So here's what you need to understand. These 5 tricks aren't theoretical. They're not abstract concepts. They're happening to you right now. Your savings are being eroded by inflation they refuse to measure honestly. Your interest earnings are being suppressed below the rate of currency debasement. The tax code is so complex, you can't possibly optimize it without expensive help. The metrics used to measure economic health are deliberately misleading, and the long-term consequences of today's policies are being hidden behind short-term political incentives. This is systematic wealth extraction, and it's completely legal because they write the laws, they define the terms, they control the metrics, they set the time horizons. And as long as you don't understand the mechanisms, you can't defend against them. But here's the thing. Financial ignorance isn't an accident. It's a design choice. Think about it. Your school taught you algebra and Shakespeare, but not compound interest or inflation. Why? Because compound interest is more relevant to your life than the quadratic formula will ever be. They taught you about the 3 branches of government, but not about the Federal Reserve or fractional reserve banking. Why? Because understanding how money is created would make you ungovernable. The system produces financially illiterate citizens by design, because financial literacy is dangerous to power. An educated population that understands inflation as theft, that recognizes financial repression as confiscation, that sees through complexity to the underlying transfers, that demands honest metrics and long-term thinking. That population can't be controlled. So they keep you ignorant. They keep you working. They keep you believing that if you just work harder, save more, follow the rules, everything will work out. But it won't. Because the rules were written to extract from you. And the harder you work under those rules, the more efficiently you're harvested. The only way out is to stop playing their game. Stop holding assets they can print. Stop trusting metrics they manipulate. Stop believing in systems designed to fail. History shows us that every empire that reaches this level of financial manipulation eventually collapses under the weight of its own lies. Rome debased its currency until nobody accepted it. Weimar Germany printed until their money was literally used as wallpaper. Zimbabwe printed until a loaf of bread cost $1 trillion. The pattern is always the same. The government creates inflation to fund unsustainable spending. They suppress interest rates to service unpayable debt. They complicate the system to hide the transfers. They manipulate the metrics to maintain the illusion. They punt problems into the future until the future arrives. And then it all breaks, suddenly, completely, irreversibly. We're in the late stages of that cycle right now, but the inflation is accelerating. The financial repression is intensifying. The complexity is expanding. The metrics are increasingly detached from reality. The time bomb is ticking louder. And when it breaks, the people who understood these 5 tricks will be prepared. They'll have moved their wealth into assets that can't be printed, can't be confiscated, can't be manipulated. Everyone else will lose everything and never understand why. In the next video, I'm going to show you why 2008 wasn't a crisis that ended. It was a crisis that never ended. How we've been living in a financial simulation since then, and why the simulation is about to crash. If this video made you see something you can't unsee, leave a comment with these words. The theft is legal. Share this with someone who still thinks working harder is the answer, because the hardest working people are often the ones getting robbed the most efficiently. History has the answers. I'm just showing you where to look. See you in the next one.